Denzel. All right, we are going to keep the ball rolling here. We've already got our next speaker up here. Leif Sereda is joining us. He's the 2019 U.S. Investing Champion. Had the pleasure of meeting in person a few weeks ago at a conference in Vegas. And now we've got you on the spaces. What's going on, Leif?
Oh, hey there, Gav or Wolf. Thanks for having me on there. It was great to be introduced by you in Vegas there on stage, and hopefully you got some tips from Jay Stan, who's a Copperfield stage manager. He was there, kind of managing the situation. It was kind of a hard.
Jay Stan Kubiak.
Yes. Okay, so yeah, he was a lot of fun. I couldn't speak with him enough, and then I'm rushed on stage with 3 hours of sleep, and I should be more used to that with 4 little kids, but Vegas, it was a lot of fun, and spent some time with I think Richard's coming on, and I met Ray. I just saw Ray popped on. Richard's my good luck charm. If you place a bet with him in the sports book, you basically can't lose. So that's it's guaranteed 1 for 1 there so far. But anyway, so I guess we'll get into some trading talk. I think it said trading seminar. I'm not sure I can put a seminar over my cell phone, but we'll get into kind of what's going on if you'd like me to.
Absolutely. Yeah, exactly like you said. And we have Ray on here who will join in as well. And Richard should be up here soon. But Leif, I'll give you the floor first, and then we can take it from there.
Yeah, I mean, really, there's not much to trade right now because of the volatility. I mean, things have to set up correctly or I don't buy it. So, I mean, that's pretty much it for now. So goodbye, everyone. Thank you. No, I'm just kidding. So, no, but volatility doesn't give you great buy points. So this is kind of a problem for what we're doing right now. But, on a day like today, you're probably looking too closely or missing the big picture. And the first reaction is often the wrong one. I guess we'll find out tomorrow. But, check the weekly charts and, maybe we've bought them, maybe we'll know in hindsight, and kind of doubtful because, a few stocks are set up. I've always liked the newsletter services because they kind of, outline at least a plan. If you're trading on your own, you can kind of talk yourself into a lot of random action, do too much on a day where everyone's right and wrong at the same time, if you're trying to do some kind of day trades and things like that. But, I do more swing trading, breakouts, and I do that on championteamtrading.com, and that's my platform there. And the plan was to basically to wait and watch for the stocks to set up in either direction. I mean, just keep it simple. And there's not many stocks setting up, and you have to define your uptrend and keep it consistent. And what I'm looking at is like 62 stocks or something like that even fit the criteria with liquidity and over the moving averages and stuff. So the Nasdaq might be. The bullish cases in the Nasdaq might be undercutting and ripping here, but chopping or could still roll. So we don't have any idea. And it could be that one day wonder. Everybody came in too excited, not knowing what to do because of the Fed and trying to judge the reaction. Everyone did maybe a little too much and kind of went in both directions. So I'm trying to look at some of the other clues like safety type trades, XLP like the staples. Even home builders were kind of weak today. So I'm kind of judging maybe a little more how long-term investors might act and behave, and retirees might not feel too good about their safe stuff getting killed while the Nasdaq bounces to levels not seen since 3 days ago or something, trading days ago. So it's going to take a lot of power to turn those ETFs to the upside in this kind of trading in the summer. I'm not sure it's going to happen, but you got to look for clues and start to put the odds in either direction. You can only slightly do so. And there's really no sure thing, and you can't really listen to anyone's opinion. Kathy Wood said something about there's a bottom, but if she knew anything about a bottom, she might have known about the top, and that was 77% ago on our ETF. So, I don't claim to know anything. That's, opinions are. I just look for clues, and that's what I'm trying to explain the clues here. I'm still on, yeah? Okay.
Yeah, you've been live the whole time. No worries. Well, let's talk about some of what those clues are and what is tradable nowadays, and what moves have you been making over the last couple months?
Well, we had this kind of bounce and roll off the lows, and that was some swing opportunities, especially in energy. Caught some big moves in there, and then the last ones, they kind of didn't work out so well. And that's what I'm noting to, if anything comes back to even, either cut it loose or size down, take some quick profits, and you're only going to get a risk multiple or two, and you kind of have to look at your stats and see where you're at. But in the overall picture, you have to know where you're at in the roll, and the roll happened rather quickly. So the last few had kind of changed the posture aggressively to the short side, as everything almost set up to the short side all at once, to the point where you had your chance to get short, or you basically had to pass. And it's sort of like setting up stocks to the long side. They all set up to the short side all at once, and that was kind of an interesting role where you could have got some pretty big moves to the downside. And we're looking into those, and that's really the move at the moment. And now it's some short covering probably, and you got to be quicker with your shorts. And a lot of the overall move has been made, and um, and now we're looking at a lot of stuff blowing up like crypto and all that. And I saw some people on laser eyes. Sorry, I don't have any laser eyes. I'll have to put those on there. But crypto is something I traded last year, and I had that on my platform. And a lot of members were a little disappointed that I think in December or before that, I just said, look, I can't get these stocks to dance. I'm out. I closed all my crypto accounts, and I was looking at the futures now. So I don't trade in the crypto anymore because I couldn't get them to dance. And the same thing with stocks. It's the same thinking. No matter how much you love an asset or security, whatever you want to call that, if they're not going to dance for you, the kind of dance party's over. You got to leave. You don't want to be the last one to leave the dance party. Kind of look like a loser, right? Standing there in the corner. That's kind of what that's all about. So getting out of crypto, and not to say I have any opinion, I just couldn't get them to dance. I said, okay, look, I made a pocket change and I'm out. And people are like, well, we expect you to kind of look into that. Well, to the short side, I say this is short, that's short. And then we're looking at the futures to the short side, and Ethereum and Bitcoin only for the last few months. And they finally broke to the downside, and there's a lot of obvious, there's two shakeups in Bitcoin and this ledge, and then it broke kind of over the weekend. So that's going to be hard to trade, but that was the plan for that, and that went to the downside. As much as I might like crypto and the idea behind it, the price action is negative. So you can't fall in love with the security. Maybe you have a preference for it, so you got to trade that over something else. But that's the thing. And anything below the 200-day moving average, like a Bitcoin kind of setting up in a tight base, well, there's people above you, the 200-day moving average kind of illustrating that, are waiting to sell to you. Kind of, they've been holding on and waiting for you to run the stock up so they can get out at whatever their price was or close to it, or whatever is satisfactory kind of exit, so they feel good about their return there, or at least get some of their money out. So
yeah, great points there. Okay, Leif, I really want to dig into your process behind this, but before we do that for a second, I just want to bring in Richard and Ray into the call. My goal and gist of this is that Richard, Ray, Leif, you guys are all kind of in the conversation. I know usually I'm just like calling on everybody, but if one of you says something and the other one wants to bounce off of it or ask a question, definitely feel free to do so. Richard, just want to kind of bring you into this if you want to talk for a minute as to anything first off of what Leif just said, and then your thoughts on the market, FOMC, and kind of what's happening here.
Yeah, sure. Great to be on. Thanks for inviting me again. Great to hear Leif's thoughts as well. Yeah, I'm pretty much in a similar mindset. For me, I'm not one who likes to day trade or play those super fast time frames. So today was pretty much just sit back and watch. And like Leif said, there's not much setup to the long side right now. A lot of stuff got hit very hard. Obviously, those past 3 days, those quick down days last week, breaking that short-term shelf that we are seeing here. So not much was set up to the long side. Stuff was kind of just bouncing from oversold. That's not really, I'm not really one to play that kind of mean reversion trade. So I was watching a few stocks that have been kind of bucking the trend over the past week or two. CRDO, DQ, PLAB, TMDX, trying to find those stocks that are kind of above the majority of their moving averages and in uptrends at this point. But it's not my style to. I did a tweet earlier today where I was kind of playing off. People like to say it's the reaction after the reaction after the reaction that really matters. No one really knows until really we've got a few days and all that information is digested, and that's when if the institutions really have changed their minds about the market, they're going to go ahead and really start accumulating, and we'll see that in the price action. But for me, trying to trade in those first 15 minutes, first hour after that FOMC, it's not really for me. Obviously, we got a strong close into the end of the day, but we don't really know if that will stick or not. And just looking at, like Leif said, the weekly charts, we've got a lot of work to do. Maybe we've got a kind of an uppercut and rally or undercut and rally scenario here, but still a lot of work to do. And the 21 EMA on the major indexes, the NASDAQ and S&P 500, that's kind of my go-to right now, and just to determine shorter term trend. And right now we're just well below that and are kind of rallying from oversold. So until we really get above that level, we see the character kind of change where we're rising above a rising moving average, a rising 21 EMA. That's when it's the time to get aggressive, when there's a lot of setups working, things are breaking out of sound bases. We're seeing those leadership groups emerge. And right now, things, like I said, it's not really a matter of the breaking out of sound patterns. Instead, they're in longer term downtrends and are rallying just because of news or just because stuff is oversold. So I've been playing pretty cautious. I'm still 100% in cash right now. Yeah, just waiting for a little bit more direction, spending my time doing, studies and other type of stuff, other projects at Traderline, just keeping myself busy until really the environment really shifts in my favor. So that's kind of how I'm playing it. And Ray, obviously I talk with Ray all day pretty much about the market. So love to hear his thoughts as well.
Hey, can you guys hear me?
Yep.
Yeah.
Awesome. So I think Leif and Richard covered it pretty well. I really don't have much to add, but with respect to the broader trend, I think a lot of people just tend to forget the very basics. And if we take, even from an investment point of view, just the 200-day on the Qs and the 200 days on the SPY, they're both pointing to the downside. So any bias, any bottom picking on a 5-minute chart should be just that. It should be for the next 5 or 10 minutes because it's most likely to break and we see new lows. Traders tend to get very caught up if they do catch a 1 to 3 day rally and try to turn it into an investment. And that's what you don't want to be doing in this environment, is to turn a trade that you made on a 5 or a 15-minute chart and then start hoping that this is the major bottom and then the Qs are headed back to 400. So it's important if you are making decisions day to day in this environment to have some time frame perspective. With the Qs in the SPY, what we're seeing is just an uppercut into the gap down area that we saw. We basically saw a price gap down on the Qs and the SPY overnight for 2 sessions in a row. It's always the case that price will come back into those gap areas, see if there's any sort of demand to go higher or at least fill those gaps to the upside, and then we likely roll over or test the lows or consolidate a little bit before we get some sort of firm direction in the markets. If the other thing I do want to point out is on the Qs, for example, if we just take the top of the prior major consolidation that we had back in the COVID correction, we're still about 15% above that. So if things were to get really, really, really bad and we get one more swing low, that would be a place to watch. But it doesn't matter what happens next. I mean, what you have to answer is the current environment, does it fit my system, and can I make a large bet to make a large amount of money in the markets? And if the answer is no, you just have to be quiet and sit on the sidelines until the market says, okay, now's your time or now's your turn. And if it does say that for you, and then you love volatility and it's your time, and you love the counter trend rallies, then this is the place for you to shine. So it all comes down to personality, how you trade. It doesn't really matter what me, Leif, or Richard are doing, I would say. If anything, you should take away from what we're saying based on our perspective and our time frames in the market itself. So that'd be pretty much the only thing I have to add.
Okay, perfect. Leif, I want to swing it back to you here and just go over a little bit. And you kind of presented this at the Vegas conference, and obviously you had a PowerPoint presentation and a whole bunch of stuff that makes it a lot easier. But just would love to hear you kind of talk through your process on a daily basis for identifying opportunities and setups, and then how you go about discovering confirmation and how you manage the risk on those plays.
Right. So, I mean, the basic trading style is from William O'Neill, and there's other influences with Minervini and Sanger for volume, and a lot of as many as I can learn from. I've always learned from. So, what I'm trying to do is get stocks set up correctly in basis with the right sides that make sense, and the ones that I don't know. Somebody just showed me this one. This came to mind. LI was this stock LI, right? a Chinese lithium company. But the right side of this base, it just shot up off the low. I mean, for me, this isn't ready. I mean, it needs some work. It is hanging in there. I don't trade any China stuff, but the right sides of the bases start setting up before the move, and we're not having a lot of that. WWE looked good, fine. So there's one or two that look okay, and that's the kind of the trap for newer investors. It's like the 3-card Monte game. On the street, some guy says, "Look at this, cup over here," and they move the ball, and you're probably just going to get stopped out, or get the pile driver, which is what I call kind of a decent breakout to full stop on a full standard stop. So you're more likely to get that in this environment, and the risk reward is very low. But one of the things you want to do right now is to track the stocks that were holding up the best. Okay, like which is the one, LNTH and HDSN. A couple of these, HDSN is one. It actually turned up today, so I considered it, but I'm like, look, the plans, I'm not going to do anything, and it'll shoot up, it'll shoot back. There'll be another opportunity, but you want to get the stocks that have the high relative strength versus the market, the things holding up the best with very little overhead supply. That's the kind of beach ball underwater scenario. You have the stocks setting up and the market tanking, and the stocks, it kind of ignores the market. Those are the ones that are going to turn up, at least if there's a swing high. Like if this is an undercut and rally situation, you can go long a few names, but in this undercut and rally, I don't see too much set up at all. Like in the last one, and that might change over the next week or so, but in the last one, there's a lot of energy stocks setting up, and things kind of improved as it kind of moved up. But that was short-lived as the overall downtrend, like to Ray's point, the 200-day moving average is kind of pointing down. And I made that comment in crypto, and that's below the 200. You have the people above you are dying to get out. They're going to sell to you if you do make any move down there. So you got to have no one above you, none of that supply. I mean, that's the real key for me. And everyone's trying to pick a bottom here, and and I've traded through 2008-9, that kind of crash in 2020, and the VIX, I've seen that at 80 twice. So not that I expect it to go to 80. I feel like this is less of a black swan type of sell-off and more of like we're on our way to recession and raising interest rates and slowing down inflation, things like that. So some people may want to make some 70s comparisons. It just makes it more difficult to trade. The Fed's not behind you. They're in front of you. You want the wind in your sails, not in your face, right? So the VIX, I am looking for some kind of a blow off, and then people will say, well, it doesn't have to be a blow off. It doesn't have to go to 80, but a blow off is, we have some price acceptance here in the VIX, and the VIX tends to drop out. This is what people don't understand. So it doesn't just sit there like a stock. It'll kind of ball up, and if you look at the VIX, it's kind of overall cut base forming up on the right side, and as that gets more developed, usually there's some kind of a blow off, and it maybe goes to 40s or 50s or something. But it's kind of too accepted up here, and that makes the low so much harder to judge for me. And then I just have to defer to the stocks, and the stocks they're not really in position for upside yet. They might have these little bounces here and there, but as they bounce, they tend to form a roll as we go lower. And I made this video with Nick. I see Nick on here, and it made a video with him about shorting, which I thought was well timed. That's why we did the video. So he asked me basically on the day I put up many short options. It was last week or two, and everything just kind of rolled. So I thought that was perfect. Of course, we have to do the interview a few days later, but the timing is everything, right? So he seemed to get that right. So, and then maybe we'll talk about energy or something like that. Energy, and the last to hold up. So.
I like that concept. Maybe you could elaborate a little bit more on it beyond just the 200-day of not having a, I guess, supply zone above you is maybe what it sounds like.
Well, to break that down for newer traders, the way you could kind of think about it is everybody's a winner. Okay, when Bitcoin's under the 200-day, not everybody's a winner anymore. Everybody was a winner on the way up. Okay, and then you can play the bases to the next base, the next area, and then when it starts going against you, now you have people that bought above you and they're dying to get out, and then not everybody's a winner anymore. Okay, so when everybody's a winner, like that's the key to thinking about the overhead supply. If there's no one above you waiting to sell to you, then everyone's pretty much a winner, and your stock is going to act differently. And sometimes I like to see a little washout on the end of a base, and that's the cup and handle. The handle almost illustrates that washout. You get out the last few kind of weak holders. If you're willing to hold through the entire base, and then they kind of spike it at the end and flush everybody out, then you're going to have this kind of stronger hands in the name. Okay, and then as it comes out of the base, you don't have anyone that is waiting to sell to you because it's a new price high. Now you have potential for mega upside mixed with growth and fundamentals and all that, of course, too, besides just the technicals.
Okay, interesting. Richard, I'd love to hear kind of your thoughts if you want to weigh in on that concept. If that plays at all into your strategy with trying to not buy something that, if it does go upwards, it's going to go right into a zone where people are going to sell.
Yeah, that's one of the key criteria that I'm always looking for is I want the stock to have as little overhead supply as possible. And that's why I prefer trading stocks that are either in super strong uptrends where overhead supply is years ago, or they're trading at actual all-time highs. That's kind of the best possible scenario because like Leif was talking about, everybody who owns the stock is at a profit as it continues higher. And anybody who's short the stock is feeling that pressure, and that can lead to more momentum to the upside. So that's kind of always the ideal scenario. But obviously, there's going to be times where we've gone through a significant correction, and a lot of the growth stocks correct more than the market. So they're going to be forming those bases. And once they get back above the moving averages, they might not be at all-time highs, but the ones that are closest to those all-time highs, for one thing, they've been the strongest off the lows for the most part. And for another, if they do progress from that point as the market turns around, like we were just talking about, there's going to be less people waiting higher to sell once they finally get back to break even. So it's kind of a psychology thing. If there's a lot of people who bought it at 100, the stock drops to 40, drops to 50, drops to 60, and then rallies back to 100, it's going to have a tough time to get through that 100 level because there's people who held and said, I'm going to sell as soon as I get back to break even, that old age thing. And that's going to basically lead to some supply at that key level. So if you take a look at a chart and you see a previous all-time high or a previous kind of swing high, that's a point to be aware of as you look left on the chart. And you don't usually want to buy right as the stock is kind of extended going into such a level like that. Often there's kind of a sideways shelf that forms, a price shelf that goes sideways where that supply is being absorbed. And then if a stock can push through a level like that, that's actually a pretty good time to kind of buy that breakout if obviously the market is behind you. So yeah, I'm always looking for as little overhead supply as possible, as strong price momentum behind me as possible. But there is kind of an interesting setup that I've learned from Ray, kind of using volume cues that I'd be interested in hearing him talking about, because often these highest volume ever signatures happen sometimes in stocks that are pretty far off all-time highs. So Ray, if you want to talk about that, that'd be great.
Yeah. So in this environment, when the Fed turns policies and former growth stocks are down 50, 60, 70, 80% off their highs, there's usually one thing that's either going to get them up and going, or they will never come back to those levels for another 10, 15 years if they don't see that. So the common thread based on what the studies I've done and what I've seen, and one of the examples could be just maybe not a similar environment, because it was still a fairly good environment back in January of 2019 when Roku was down 65% from highs, and then we see big volume come in, which was the highest volume since IPO week, and it ran into the $40 mark and it closed right near the highs of the day. And then it followed that $40 million day, I think, with 45 million shares, and then the very next day we see continued demand in that stock, and Roku in about a span of 3 or 4 months went from that $40 mark to about $75 and was 10% off of his highs. So to chew all that, so overhead supply, what Leif said with people, they just want to get out even, and they're just waiting for that price to be there so that they could just get out flat, moving averages pointing down, everybody being underwater. There's one thing that can sort of equal them out. That is institutional volume that shows up in what I call the highest volume edge. or the HV edge. This would be the highest volume in over a year on a stock, highest volume since IPO week, highest volume since last earnings, highest volume since highest volume ever. And that institutional footprint is basically institutions saying something about the story, something about the stock has completely changed for them to create that 40 million in volume, to soak up all that supply, that overhead supply, and reset the story on the price and volume chart. But also the story itself, the fundamental story of the stock might have changed. So for the people listening on this call, Roku is probably one of the ideal examples. Is when things get really, really bad and they're 60-70% off the highs, that highest volume edge is likely going to be your first clue that a stock has really bottomed and is ready to go for a run. Yep.
And I pasted that chart example to the top of the space if anybody's curious. But Ray, sometimes this is like well off highs. Like we've seen a few examples recently. How do you decide whether a stock is tradable even if it does have this high volume edge?
So there's a few things. One thing I look for is group strength, right? If a bunch of Oilers are doing the same thing and we're seeing HV1s, which we did see a couple of months ago, then that's something you want to pay attention to. One stat by William O'Neill says that 37% of the stock's move is dependent on its group, or I might have got that stat upside down, but there's a lot of dependency on how the group is trading, how the market is trading. And when you combine those with the edge itself, which is the highest volume edge, you'll get higher probabilities. And some setups where you'll see a bunch of names maybe in the semi space doing the same thing, maybe in the biotech space recently, like RPTX, APYX, doing the same thing. The oil and gas space all this year has been doing, that same thing. So you combine a few things, so that volume signature combined with group action, and then if the market aligns with it, that really creates a recipe where you could get a stock to move in your way to a tune of 30, 40, 50%.
Love it. Okay, I think it's pretty interesting, especially with the volume side. Leif, I want to bring it back to you. Maybe if you want to comment on that, but you also mentioned oil and gas, so I'd be interested to get your thoughts on that sector.
Trying to slow things down, so the price of oil may come in a little bit, and the energy is the last thing to kind of hold up, so that's going to be a big clue. And if you want to trade energy, and this comes across my platform, a lot of different ideas all the time, and seeing MNRL, this and that, always one setting up, and I'm like, okay, we're going to look at the strategies to look at the leaders, like Oxy, for example. So Oxy got upgraded. And what I'm doing now is watching them closely, seeing the reaction. After the FOMC, Oxy's putting in sort of a mini roll below the 50-day now, and we'll see if it's can find its feet. But if this kind of rolls lower, you don't want to be trading other energy stocks. Most likely, I mean, I'm only using edges, right? Like I put the odds, it will go against you. Say Oxy rolls off, I don't know that I want to be trading any other energy stocks. So, we don't know anything. We're watching the clues. But if you know the clues, you're putting the odds in your favor, perhaps, at least slightly. And then you're risk managing. And in a choppy, difficult market, like 2019 was the U.S. Investing Championship when I won. Most people got blown out, and it was a really difficult year, despite what the market looked like, kind of sideways and choppy. But every time it got going, everybody got aggressive, and then would kind of rug pull and all that. And I saw David Ryan's son's actually, I think he's like in the lead or something now. And I was saying, well, he's probably going to do pretty well because he was through that chop and managed to, he was second then. And so I don't know what he trades or anything, but, if you can get through that, okay, that's like, this is a similar year, maybe a little more negative, actually, a little more obviously negative. So you just want to be able to press your bet when it's good and keep your account intact. And when it gets really good, you're going to start to have easy wins. Things are going to be moving to the upside. Won't be so choppy. And that's when you kind of have to move all your chips in. And it's kind of a gambling analogy, but I kind of hang out with a lot of professional gamblers too. So I think a lot of that rubs off, but we're risk managing first, and we're not cowboy trading anything. We're very careful with our risk management and, trying to aggressively trade it with as small stops as possible and getting size when things are working.
Yeah, good points all around there. Richard, any thoughts on gas oil? Have you been playing that at all?
Yeah, I've traded it a bit this year, not as much as I should have, to be honest. I got some nice trade in VTNR during the last kind of upswing. But yeah, I really like what Leif was saying about Oxy. Right now, we've got a pullback. Oilers in general are kind of weak today, which is something I noticed. And we're below that 50-day moving average after kind of a big downside reversal on 5/31, May 31st, where we had a gap up. It looked like the stock was progressing to the upside. Then it kind of failed, sold into the end of the day on high volume, went sideways, and now it's undercut. Those intermediate trend moving averages. So it's got to kind of base up and heal a little bit, but you don't want to see it living too much and kind of leaking below that 50-day moving average. And that goes with a lot of the oil and gas charts. They've had super strong runs. They got a little bit wider and loose. They kind of firmed up. Bases again moved up, but now kind of are not progressing super well from that last base. A lot of people have eyes on them. That doesn't mean it can't work. It's just kind of the odds are against you. You want to try to catch these names earlier on in the move. But yeah, I don't have too much to add outside of that. Just you got to watch those key moving averages. You want to see it kind of stick here, firm up, and kind of resume to the upside if these are going to go on another run.
Okay, perfect. Anybody else want to weigh in on that?
I would just add watch the 10-week line on XLE. It's probably your easiest bet. There's a lot of macro and a lot of news-based movement in the oil space. So if you're not well versed on numbers coming out, rig counts, and all that stuff, then it kind of gets hard in that space to keep track of why something that was trading down yesterday is up 2% today, and we see holes on the charts everywhere. There's a lot of news-based movement in the oil space. But to keep it easy, I would say just watch the 10-week line. That's usually institutional support in any uptrend for any group in the markets. And XLE at the moment is still below the 10-week line for the week.
Got it. Okay, a couple more pieces here that I do want to go over. So today we had that FOMC meeting. We haven't really talked about it too much in here yet today. Leif, did you follow along with that? And I would love to hear your thoughts coming out of there and what that means for the stock market moving forward this year.
Well, I mean, the Fed's trying to slow things down, and how they do it, how it's all interpreted, it's anyone's guess. And I think, like I said, everybody came in a little bit excited, maybe too much excitement. This could be kind of a one-day little pop. Too much short covering, too oversold already. So I don't think. I mean, it's kind of a negative thing for me, in my opinion. But we'll see. They took it as sort of dovish to start with, so we'll see. But I mean, the first reaction's sometimes the wrong one, and we're gonna see if any stocks start setting up. I mean, that's the real tell. We kind of knew. I mean, a lot of people knew the odds were they were going to do this, so. There's nothing new here. Now we're starting to play, the stocks themselves and see if anything starts to form up, or if we're going to roll over. We're going to see, and that's the real tell. I mean, there's nothing else to discuss. I have an MBA in finance, but I lost it a long time ago. I mean, there's no point. You don't need to be an economist to kind of judge the market action if you're looking correctly at the stocks themselves. So.
Got it. What stocks right now, I guess, do you have a watch list put together, and are you open to sharing kind of any of the names or setups that you look pretty good to you right now?
Yeah, I mean, the real thing is to save the last leaders and just hold on to those and look for new leaders. And one of the things we want to do, if we do blow out, is to find new names that don't have that overhead supply. And sometimes that's going to be IPOs or, just high relative strength stocks. But as far as a watch list, long, like HDSN was one that I might have traded today because that's a high tight flag, and maybe there's something new. It's pollution control group and all that. But overall, I'm keeping it really light at the moment. We're just watching, and I need to see more stocks set up together, more groups start to firm up and show me like actual bases and buy points versus just randomness, and that's all we're walking into at the moment. And coming up off the lows, a few weeks ago, we had a bunch of setups. So you can trade them when they start to firm up, even if you're in a downtrend. You just have to recognize where you're at and that there's sellers above and they're going to slow your move down. even if you pick the ones with no sellers above in your stocks, the market will slow you down ultimately. So you got to be a little bit quicker until this all kind of resolves itself.
Okay, got it. So I guess kind of with that speaking, I'm sure there's still, maybe a couple setups. Are you mostly trading SPY and the Qs, or are you usually trading individual names?
Well, the last few we're looking short. Like Cisco is a short that I talked about with Nick, and Nick's on here too. I don't know if you can. Nick
You want me to get
Drendel's
Nick?
on there. Yeah, you can get him on there. Maybe he's got some kind of a short stuff for you, but he's got a good video. Check that out. The timing of that was perfect. So you can see what I was thinking. Now what I'm thinking is we're too extended to the short side. And I asked this question on Twitter. So if you follow me on Twitter, I drop little cryptic clues and other nonsense on there, but usually there's some kind of a purpose behind it. Otherwise, I don't like to waste people's time. But what I was saying is yesterday was, what are your best short setups? And then, guess how many replies I got? 0. So I think people that follow me closely know that that's what I was thinking. That's what the video was talking about from a few days before. And if things go way out of position to the short side, you're extended, and then it's not a good time to short any longer. So we're sort of waiting for the longs to set up, but I think a few may set up short, and we could break that way too. We're just going to have to see.
I see Nick just came up and joined us. What's up, Nick?
Hey guys, how's it going?
Doing
Hey,
well.
Nick.
Yeah, Leif, I was surprised you were trying to set up all your followers for failure there on your question.
No, see, it was a trick question, and they got it right. So no one said any good shorts, and then that was good because it bounced today going into FOMC. They were extended, so there's no setups. There's if you see all the setups that Nick and I went over in that video, you need some kind of tight action to roll off of to shoot against. You can't put a stop randomly, otherwise you're gonna have random results. I mean, you got to use an edge, and you really have to short stocks when there's a market break. And right now, the market may have found some footing for the time being. So we'll have to judge that as it comes, and the stocks kind of give the clues along the way.
So Nick, maybe bouncing off that, what are some positions that could be maybe good shorts now, or anything else you want to add off what Leif said?
I was just looking at some of the weaker names most recently. Basically, like, what are stocks that have been beaten down? And then I sorted that list by the stocks that were up the least today. A couple, like SoFi, Upstart, Dutch Bros, starting to just like make my list. But similar to when we try to trade on the long side, we want to see some consolidation before an eventual break with the size or with the trend. And we just got a rally today, so look for a little bit of consolidation before I try to put anything short.
Got it. Sounds good to me. I think that all makes sense. Okay, we've got about 22 minutes left here. I will extend an open invitation to the audience if anyone has a specific question. We have a top tier panel that definitely people should be following. Some great people up here. Richard's on Spaces with me every single week. Nick's been coming on more Spaces. Great to have Ray and Leif on here as well. I'll actually throw the question to Richard real quick. I know you mentioned them earlier. Do you want to go in depth on any more of the specific setups that are on your radar right now with any specific tickers?
I mentioned a few earlier, but kind of like what Leif was saying, they're kind of lone warriors right now, and there's not really groups working together. So I think it'd be better off just kind of watching them, see if they progress, see if they work out. AERC, I think Leif said it as well. That's one that's been absolutely killing it. I think it was up a crazy amount today, off the bottom on huge volumes. That's worth watching to see if it forms a base in the future. But just kind of wait and see. I mean, are the probabilities with you to try to pick those few stocks that are going to buck the overall downtrend of the market? Probably not. So it's best to wait until those probabilities are with you. O'Neill's study showed that 3 out of 4 stocks follow that trend of the market. So trying to find that 25% is kind of a losing proposition. So that's kind of what I would say on that.
Got you. All right. Buck Russ, what's up?
All right, I want to ask about my position that I've got. I bought capped 200 puts last week when it finished its gap up to 232. Had really nice price action coming down to our current levels at 205. And if this thing plays the ranges like I think it might, we could see some further downside action to 190 or even 185. What are your guys' thoughts on now, especially with the macroeconomic conditions that we have with regards to a slowing housing economy? Where do you think this thing could go long term? Any thoughts on this? Thank you.
Yeah, I mean, I guess we could touch on a specific ticker. Ray, Nick, Leif, got any thoughts there on Cat?
Yeah, I mean, right now we're not getting much more than a 2 or 3 day pivot anywhere. I mean, it reminds me of Philip Morris. It's kind of one of the clues I'm looking at, sitting on the 200-day. I mean, there's a large dividend in it, so you got to adjust it probably. But Cat's doing a little bit of the same. And once again, these are kind of sideways action bases that usually those types of stocks flush out before there's an overall market bottom at some point. I mean, it's been lower already, but dodge the downside. I mean, I couldn't tell you if this little ledge breaks as a 3-day ledge on the 200-day. It's maybe a setup, but I like longer kind of ledges or areas to shoot against. And right now we only have 2 or 3 days. That's because we're extended to the downside. So, I don't know what to say exactly, but it's really below this 3-day ledge on the 200-day. There's air below it. That's all I know.
Cool. Richard, you want to comment on that at all?
Yeah, agree with all that Leif said. Just looking at the chart, it's been super choppy. This is one I was watching back in the kind of late March timeframe where it was kind of setting up on the right side of the space. Then we kind of had a failure, a reset, then a really strong push up, but then that kind of breakout from that pivot failed, and now it's just been choppy. And I don't like trading stocks long that have been gapping down like that. And to me, this looks kind of like just consolidation before the potential for further downside, just a potential bear flag type scenario. So it could rally, retake that 200-day, push up from here, but not a stock that I would want to hold long here personally.
Cool. Buckcross, hopefully that's helpful.
I have a point too. Something I use that really I didn't see in trading anywhere is called the average true range, and it kind of shows you if the stock's too volatile or not. You can put this under your chart, the 14-day average true range. And right now, everything's very volatile. If it's rising, it's usually not the best buy point. If it's kind of declining right into your tight area, you're buying as a breakout or even a short. That's what you're looking to shoot against. You're having some kind of tight area. And visually, some people don't need it, of course, but the math is there. You can find stocks that are setting up tight by having this decline and having it sorted by stocks that are declining on the average true range is declining. So there is some math there that can help you find the tighter areas.
If I may, my one question about this though was also just the macroeconomic view of these. This is a nice dividend stock. I think Warren Buffett actually just increased his position in CAT recently. Is this something that people are looking to as a safe harbor? Perhaps I should disclose once again, I'm short on this right now, but I'm wondering long term if this becomes something that people look at as a safe haven, especially with an increase in dividend like we've seen. Might we see dividend stocks like this also see higher inflow as we go through more turbulent times?
Well, as they raise interest rates, so the safety trades. That's what I'm looking at today. Is like Procter and Gamble. I put that on my Twitter feed as a little clue, and I said it's kind of hiding behind the volume bars at the bottom of the chart. Like, can you see me there? It's kind of hiding out behind a down volume bar, meaning that this kind of safety trade is getting hit pretty hard. But we'll see. I mean, we don't know for sure. I don't know if CAT is the safest stock. That's not for me to answer. I would probably say no, but I don't know. So.
All right, I'm going to pull it back into a few others. But Buckcross, appreciate you coming up and asking. Okay. Stock market news. Would love to come to you for a second. Are you available for a minute? I wanted to see if you had any questions, anything you wanted to throw out here.
Yeah, no, I am definitely here. I always kind of like to, we're 6:45. We're kind of on a Wednesday. I'd love to hear some thoughts about maybe what we're expecting for tomorrow. It felt like the start of this week, everyone was waiting for Jerome Powell, and now we got it. I know last meeting, people were talking about earlier how we kind of had this 1 day rally, and last time it didn't hold it. So I don't know. Is anyone kind of playing a trade, or we kind of just waiting and seeing? But yeah.
All right, well, let's talk to what we're looking for tomorrow. Ray, want to go first?
Yeah, sure. So I'm basically watching the markets. I like to keep it simple. I'm either 100% confident, and my system says I should be acting with large exposure and big positions to make big progress to the upside or the downside, or I am in cash and I'm watching on the sidelines. So at the moment, there's not much. You should be short already from that, from the 410s on the SPY. And you should be covering your shorts right about now after we get the, sort of a 2 day congestion area and then a third tight close, and we attempt the gap down area today due to the Fed. So it's sort of no man's land. There's no probability of big directional movement that's going to net me, it's gonna create some sort of equity curve spike for me. So I'm on the sidelines watching. There might be a setup here and there, and I'm more than happy to miss that and gift that setup to other traders in the market. For me, it boils down to if I need to be confident and my system needs to say it's go time for me to act on it. And as long as I don't see that, if we come up to SPY 400 tomorrow and I still don't see that, I'll be, for lack of a better word, a stubborn asshole and just sit there until my system says it's time to act. So that's what I've learned over the years, the hard way, to be a consistently profitable trader, to make this your full-time gig and get an income out of this game on a full-time basis. You have to do a lot of watching and less acting. I see, I could see where people want to be active every single day in the markets and try to extract an income and be the most amazing day traders, but I don't see any successful day trading billionaires walking around every day. So yeah, I mean, for me, cash is a position, and that's 100% of my portfolio. And when I start to see some probabilities of, to the downside again, if we run into the declining 10-day, that might be an area of interest to go back short, or maybe things shape up and we go zip right back up, and then setups, groups, leadership groups, we see a follow through day of some sort. Things got to be natural, and if you've made money in the markets in the past for shorter spans of times, from 1 month to 3 months, go look at those spans, and what worked in those spans is going to work again if and when it's time, right? So there's no need to force it. So that's my perspective on tomorrow.
Okay, perfect. Appreciate that insight there. Nick, want to weigh in on it?
Yeah, similar to Ray, and kind of what Leif was talking about. Even though we're coming off the bottom with a good amount of pressure, QQQ's up 2.5% today. Even if we get more follow through the next day, I just went through my entire kind of general watch list and still only found a very few number of stocks that even are generally setting up. So there's nothing that I can like super confidently put on a focus list and that I have a trade idea with an entry and a stop loss all set. And when I don't have something like that set up, it's best to either not trade at all or trade like extremely small. And then if you see that first couple trades starting to work, then you can build your exposure. But I'm also in 100% cash trying to get back into the market, but I don't see a ton of setups dragging me back in right now. So still playing caution.
Okay, perfect. Got it. All right, I just want to talk crypto here for 1 second. Leif, you kind of mentioned it beforehand. Do you trade any crypto at all or hold any? And just any general thoughts on the way that market's going?
No, I was only setting it up to the short side. It was only setting up short Ethereum and Bitcoin recently, and then broke with the market there. But no, I don't hold it because it's not in an uptrend any longer. I like I said, I messed with it last year, and I have a whole crypto section, and now it's just about the short areas for shorting the futures on Bitcoin and Ethereum. So
when you're going short,
yeah,
when you're going
short downtrends, and we don't short highs. If something's a downtrend, builds a ledge, and the market's negative and breaks, you're always to the downside. I mean, you're placing your stop. You're not. There's no diamond hands involved with it. It's always quick risk management, and I'm wrong quite often. And you can get out if it goes against you, just the same as a stock. But as far as getting involved with the fundamentals behind the protocols and all that, I've had speakers on that talk about that and stuff. But mostly we're looking at price action, and it's in a downtrend, unfortunately, for everybody that holds it. But it's not for me to trade long unless it gets above all the moving averages and they all start making uptrends again, and the party's back on. And that's more about liquidity and other things with how easy money is in the system. And the Fed's tightening, and what do you think crypto's doing? I mean, it's a little bit of that. It's money's a little more expensive all of a sudden. You go get your mortgage or something like that. And I have another indicator for the housing market top I was just thinking of, and it's when your friends send you a Zillow listing of a similar property that's like 5 times what you paid for it, and you can't help but laugh because it seems sort of unaffordable, and you'll probably never sell at that price. And there's no free money for that house any longer, since the mortgage is going up. It's more expensive. So besides just the price, the overall carrying cost of everything and the borrowing is more expensive, and that tends to hurt all risk assets. So it just kind of spreads into everything, including crypto.
Got it. When you're playing downside, are you using puts or are you outright shorting?
Well, the only thing, because I closed my crypto accounts because I had something that I was worried I could even get the money out of there or something. I had this Binance thing, and then one of my guys told me that they were having some issues, so they wouldn't even let me take the cash out. The only way I could move it was to put it into crypto and move it to Coinbase and then get it out of there. So, and this is just I was done with it at that point, just trying to remove it last year. But what was the question? I'm sorry.
Just if you're using puts or if you're outright
shorting.
shorting.
Oh, that's right. Yeah, outright shorting using Bitcoin futures. There's futures contracts you can trade.
What about for stock?
For the stock, yeah, I mean, I have traded plenty of crypto stocks, but they all kind of ended up being sort of pump and dump action here. I had like Hut, it was like a crypto stock, a mining stock that I traded. Stuff like that. And then, that's back when it was, around $12 or whatever. Now it's like $1. So obviously when it goes in a downtrend, I lose interest, and it doesn't even make my screen. So it's not a shot at crypto. If you're below the 200-day moving average, you're dead to me unless I'm shorting it. And really I'll only look down there when it's time to short. So then this screening becomes different.
Got it. Leif, one question which I had, since we got you on Spaces, I'm curious, going back to 2019, you mentioned that was a very difficult year. What are some of the lessons that came out of winning that championship that maybe you're applying into this market?
Well, everybody wants to compete. And like Ray said, everybody wants to be a trader that makes money, but a lot of the year you're not going to make money. And that's why I'm always into some other stuff, and I'm doing champion team and, studying the markets always and keeping busy, or, used to do other businesses and things. But what was your question again?
I was curious, you spoke to the difficulties of trading in 2019.
Oh, 2019. Yeah, the difficulties between that and this is everybody wants to pump it all the time and really make money all year, and you can't really. So, when it's quiet and choppy, that's the time to stay safe. And, when the wind's behind you and at your back, that's the time to press it. So that's what we're looking at now. It's too choppy and too unknown. Is you can get the feel for. And these guys know what they're talking about too, Ray and Richard and Nick here. Maybe just nothing's really set up for proper swing trading with bases and pivots and things like that. So when things become a mess, we just have to step back and wait for it to sort of set up again.
Got it. Leif, do you use any other tools like the option flow, level 2 data, any other pieces to supplement what you're doing?
Yeah, they've sent me all that to look at different services, and I find it sort of misleading sometimes. And the price action volume is really all you need on the chart with the moving averages. And when you have sometimes volume dry ups mean a lot. And I talked to Richard. I sort of offhanded made up this idea about a reverse pocket pivot, and maybe Gil or someone even had that idea. I don't know, but The biggest volume in 10 days is the pocket pivot. It's something opposite of that. You have these volume dry ups and, going into buy points with big moves, with big volume coming out. That can't be hidden on the tape so much. When you have these options, there's different reasons people use calls and puts. It can just be hedging. It doesn't mean anything sometimes. And if you want to see, the big flow, it's always Tesla and SPY, and it's kind of useless to me. And it's just not something that I use. I mean, maybe somebody's great with it. I don't know. It's not for me though.
Yeah, that's fair. All right, we have 5 minutes left here. Richard, I want to pop it to you for a second, just to give us a note about the upcoming Traderline conference, and then I'll go around and give everybody kind of some closing thoughts here before our next space.
Yeah, absolutely. Thanks. The Traderline conference, this is going to be our second annual conference. Super excited for this year. We're going to make it bigger and better than last year, which was already awesome. I pinned to the top of this space just a quick link to the landing page here. It shows you some of the speakers for this year. Overall, we're going to have 28. Ray and Leif in the space right here are going to be presenting. I see Jack in the audience. Scotland was in here earlier. They'll all be presenting as well. And what's great about this, I think, is it's 100% free, and it's basically an amazing group of fantastic traders who I've learned personally so much from, and all kind of trade in similar different ways, but all kind of have the same principles that we fall back to and are timeless, going back to O'Neill, Darvas, Livermore, all of that. So it's going to be on July 9th and 10th, as well as the next weekend, the 16th and 17th. I highly recommend you click that link in that tweet here. Sign up for the email list. We'll be putting out some resources as well as additional information, and it should be a fantastic event. Last year we had over 100,000 viewers overall, and we're hoping to really smash that out of the water this year as well. Really looking forward to it. A bunch of returning speakers, Leif being one of them. Ray is new this year. We had Ross speak last year from Traderline, but Ray's representing us this year. Really, really looking forward to it. I think it's going to be a fantastic event. And like I said, 100% free. You can't beat that. And it's going to be streamed live on our YouTube channel, which is youtube.com/TraderAlliance. So with that, really looking forward to it. And maybe I'll throw it over to Leif and Ray to kind of talk about what they plan to speak about with their presentations, and maybe we can bring Jack up here as well.
Yeah, and just to note, I do have a hard stop in 2 minutes. We'll have new speakers be coming on at 7. So I'll maybe do that together. Leif, if you want to speak that real quick and kind of combine any closing remarks you want to make with that, that'd be awesome.
Sure. Yeah, I was the first or second to do Richard's interviews. It was when he first started out. So always happy to hang out with Richard and talk. We'll see what we want to do. Maybe some high tight flag stuff. Maybe some stuff on shorting. I like to do something that people don't get into. Otherwise, it's a lot of the same. So I try to get involved with something new. So we'll find something. We'll figure it out. And thanks for having me on. And hopefully people learn something. But basically, we're exercising caution, and I think maybe new traders can say, okay, well, these guys aren't really doing anything, and that's kind of how it works. So good trading is boring trading sometimes.
There we go. Yeah, I'm excited for this one. I just looked through that list. It's a really, really top tier list. Congrats to Richard for putting that together. I'm definitely excited and looking forward to it. Ray, anything else you want to share on this one?
No, I think the conference this year is going to be awesome. We have a mix of, the idea is to gather proven winners in the markets, former investing champions, top performers, a little bit of psychology. Jared Tendler, if you don't follow him, Denise Scholl from the psychological perspective. Brian Shannon is always awesome. And David Ryan, 3 times U.S. investing champion. So it's a good mix. It's a good group. A lot of experience. Dr. Eric Wish has been in the markets for 50 plus years. So you don't want to miss this. We want to make it better this year, and it's going to be, and we'll have some new speakers announced early next week as well. For me, I will be presenting on a very specific topic that is, core to my trading is defining edges and how to have an equity curve mindset is going to be my presentation. So I'm looking forward to it. And yeah.
Perfect. Thanks, Ray. Nick, anything else you want to say on this one?
Nope. I think everyone covered it. Thanks for having me on.
Yeah, absolutely. All right. And Richard, any final words?
Yeah, just be patient. If it's not your type of environment, there's a lot of great ways to spend your time. Read some books, watch some videos on YouTube, attend the conference, of course. But you don't have to force your trading just to be active in the market. Wait until the odds are with you. So that's all I'll say.
Perfect. Huge thank you to Leif, Richard, Ray, Nick for coming up, being a part of this tonight. Would love to get you guys back on in the near future. Obviously, a turmoil and tumultuous market. Everybody, you can also catch Richard on Spaces with us tomorrow at 3 p.m. EST with Brian Shannon. We have a full day of Spaces tomorrow, but we have one more space for today starting now. So thank you, Leif, Richard, Ray, Nick. Take care. Enjoy your evenings.